Okay, good morning, good afternoon, good evening, depending on where you are hearing me from. You are welcome to this webinar, and welcome to the 16th edition of U&Credit CRC webinar series. So my name is Joshua Oluwashayo, and I will be the moderator for this webinar. And U&Credit webinar is part of CRC's corporate social responsibility initiative, designed to educate Nigerians on the issues of credit and the impact on the financial lives of Nigerians. So the theme of today's webinar is how Federal Competition and Consumer Protection Commission regulation shape responsible borrowing and loan recovery. And we are glad to have all of you with us. Once again, my name is Joshua Oluwashayo. I'm the moderator for today's webinar. So please be advised that we are recording this event and we are also streaming live on our various social media platforms. And the recording will be made available after this webinar. So kindly use the question and answer box for your questions that you may have. And I can assure you all the facilitators, that is the panelists and the speakers, are going to be attending to your question. And today we are honored to have with us the CEO and the Executive Chairman, Vice Chairman of FCCPC, Mr. Tunji Bello, and is ably represented by the Director of Corporate Services, Mr. Ondaje. And we are also glad to have in our midst the MD and CEO of CRC Credit Bureau, Dr. Tunde Popola. Also in our midst is Mr. Bisiriu Kazim, the Chief Risk and Compliance Officer of Axiom Microfinance Bank. And with us again, we have Mr. Elijah, the Regional Relationship Manager at CRC Credit Bureau. So in this webinar, it's going to be structured in a way that we'll have the MD give his opening remark. He will give us the welcome address. Then thereafter, we are going to have the representative of FCCPC, Mr. Ondaje, to give us his keynote speech. There, just a moment. So we'll be having Mr. Tunji Bello. Mr. Tunji Bello, who is the CEO and Executive Vice Chairman, is a distinguished public administrator, environmental governance expert, and accomplished legal practitioner with over 3 decades of leadership experience across journalism, law, environmental management, and regulatory oversight. Currently serving as Executive Vice Chairman and CEO of Federal Competition and Consumer Protection Commission, he is widely recognized for his expertise in consumer protection, competition law, environmental sustainability, and good governance. Mr. Bello holds a BSc in Political Science from the University of Lagos, a Master in International Law and Diplomacy from the University of Lagos, and LLB from the University of Lagos. He was called to the Nigerian bar in 2001. His journalism career flourished at Concord Press of Nigeria, rising from feature writer to editor of Sunday Concord and National Concord. His international credentials include stints with the St. Petersburg Times, Florida, and US News and World Report, Washington, D.C., later serving as chairman of This Day editorial board from 2000 to 2003. He earned multiple awards, including the Afro-Friendly Press Fellowship in the United States of America. His public service includes 3 tenures as Lagos State Commissioner for the Environment under the Governor Tinubu from 2003 to 2007, and Governor Fashola from 2011 to 2015, and Governor Sanwo-Olu in 2019. plus secretary to the Lagos State government under Governor Ambode from 2015 to 2019. His environmental stewardship earned recognition from the Nigerian Society of Engineers and UNDP. An accomplished author, Mr. Bello has written 1 book and contributed to 4 others. He continues driving consumer protection reforms and regulatory excellence at the FCCPC. And as I mentioned, is ably represented by Mr. Ondaje, the Director of Corporate Services. And the chief host, the chief host Dr. Ahmed Babatunde Popola, who is our amiable CEO of CRC Credit Bureau. Dr. Popola is the founding managing director of CRC Credit Bureau, Nigeria's largest credit bureau, where he has consistently championed data-driven solutions for access to credit and sustainable Nigerian economic growth. Dr. Popola has been at the forefront of the development of the nascent credit reporting industry in Nigeria and sub-Saharan Africa, and we are very proud of that. He assisted in the formulation of guidelines on the licensing, operation, and regulations of credit bureaus in Nigeria, 2008 and 2013, the enactment of Nigerian National Credit Reporting Act, 2017, the formation of the Credit Bureau Association of Nigeria, the introduction of the bank's verification number in Nigeria, and the formation of Credit Bureau Industry Association for Nigeria, among others. He was the chairman of the Credit Bureau Association of Nigeria and is also presently the co-chairman of the African Credit Information Sharing Association. Before CRC, Dr. Popola was the founding CEO of Abuja Enterprise Agency, where he championed entrepreneurship, youth and women empowerment, notably enabling Nigerian students to win the Global Students for the Advancement of Global Entrepreneurship World Cup in 2007, 2008, and 2009. His 14 years in banking saw him rise to the position of CFO General Manager at a publicly listed bank. And our panelist, Mr. Bisiriyu A.O. Kazim, our amiable Mr. Bisiriyu has been with us as a consultant, a training consultant for over a decade now, and we know his capacity. So Mr. Bisiriyu is a chartered banker with over 20 years of distinguished experience in the banking and financial industry, specializing in risk management, credit administration, and microfinance operations. He possesses a strong track record in in leadership, credit risk governance, and strategic portfolio management. He's able to work effectively independently and collaboratively with proven leadership skills in managing, developing, and motivating teams to achieve organizational objectives. His experience spans retail and SME lending, enterprise risk management, compliance oversight, and institutional capacity building within Nigerian financial services sector. Mr. Kazim has attended numerous local and international executive training programs covering risk management, credit administration, and high-performance microfinance. He holds an MBA in finance and is recognized for his first-class analytical, intellectual, interpersonal, and problem-solving skills, which have consistently enabled him to drive corporate value creation and institutional resilience. An internationally certified expert in microfinance from the Frankfurt School of Finance and Management, Germany, Mr. Kazim is also a fellow of the Chartered Institute of Bankers of Nigeria, a fellow of the Chartered Institute of Credit Administration, and a microfinance certified banker of the Chartered Institute of Bankers. He serves as a faculty member and facilitator with both CRC Financial Education Center and the Microfinance Learning and Development Center, where he has been actively contributing to the development of the microfinance subsector of Nigerian banking industry since 2011. As the current Chief Risk and Compliance Officer of the National Microfinance Bank in Nigeria, Mr. Kazeem continues to champion the strengthening of risk management frameworks, regulatory compliance culture, and strategic credit discipline across the institution. And last but not the least, we have with us Mr. Elijah Taiwo. He serves as the Regional Relationship Manager at CRC Credit Bureau, managing Lagos and parts of Southwestern Nigeria. He earned the Bachelor of Science from Lagos State University, and is pursuing a Master's in Risk Management at the University of Lagos. With years of professional experience, Mr. Elijah has developed expertise across sales and marketing, risk management, and relationship management. His academic background, combined with hands-on industry experience, positions him as a knowledgeable professional in the financial service sector, specializing in credit bureau operations and regional client relationship oversight across one of Nigeria's most dynamic commercial regions. Thank you for listening to the brief citation of our speakers and the panelists. So at this junction, I would like to welcome our amiable MD and CEO of CRC Credit Bureau Limited, Dr. Ahmed Tunde Popola. My MD, sir, you are welcome on board for your welcome address, sir.
Thank you so much, Joshua. Good morning, everyone. It's my pleasure to formally welcome you to the 16th edition of CRC webinar series, Value and Credit. I want to especially thank the Executive Vice Chairman CEO of the FCCPC, Mr. Tunji Bello, for his support for us in supporting us for this webinar by being ably represented. And I really then want to thank Mr. Ondaje Jagu, Director of Corporate Affairs at FCCPC, for being with us live this morning. And I use also the opportunity to thank Mr. Bisiriu of Action, my colleagues at CRC, Elijah Taiwo and Joshua Tayo. Distinguished ladies and gentlemen, good morning, good afternoon, or good evening again, like my colleague said, depending on where you are watching us from across the globe. CRC is being in the business of credit reporting for some years now. And it's really been very interesting to see how the industry has evolved. I'm trying to navigate through making my slides to be able to move around. Okay, so I think it's better this way. Yeah, so what I'm trying to do now is just to welcome you and to introduce you to the subject of our discussion today. As we know, we are in the business of data and data to support access to credit. And we know access to credit is part of the fundamentals of access to finance. And we also know that finance is extremely very important for both consumers and businesses. In fact, finance is a fundamental requirement of man and business. Without money, without access to finance, it becomes difficult to live a meaningful life. So it's very important. And credit is one major source of finance. We also know that credit market in Nigeria has been evolving over time. We seem to be at an interesting age. You know, now we have a significant number of players in the credit space. We know the conventional commercial banks. We also know the conventional investment banks, leasing companies, finance companies, and so on and so forth. We now have an array of microfinance bank, micro lenders, fintechs, all of them being big players in the credit space in Nigeria. And all of them are trying to deepen financial inclusion, you know, driven by technology to lift Nigerians above the poverty line. So micro lenders and fintechs, they continue to play significant roles in financial services industry in Nigeria. We know the commercial banks, we know the role they can play, but a lot of people underestimate the role that micro lenders, fintechs, all those with apps that they are playing currently in the Nigeria lending space. I try to look at so that we can have a holistic view of what's going on. I look at the website of FCCPC, our partner for this webinar, and I realized that they listed 465 entities with digital lending apps on their website. They also listed another 30 that are licensed by the central bank. So if you add the two of them together, that's running to almost 500. That's 495 recognized lending companies using digital apps, lending apps in Nigeria. They also listed around 103 apps on watch lists and 45 apps that have been delisted. So what we see is that while some of these lenders apply responsible process for lending and default management, we see that some really do not have that opportunity. So this is where the issue is. We are confronted with quite a lot of challenges around the behavior and the practice of some of the lenders in this space. Particularly, it's very disheartening to see some of the practices that some of these lenders with apps, what they do to their customers after they have taken the loans and through the process of repayment. I know FCCPC is on top of this. This is the major reason why we decided to engage FCCPC to join us today so that Nigerians can hear direct some of those issues. Nigerians also can express themselves, some of the challenges they face, and maybe there will be some additional insight that we can get from FCCPC and other speakers as we go into this today. Because even as bureaus, we continue to receive inquiries from the general public on the activities of some of these apps, providers who are using them to lend. Meanwhile, some of them are not even on our platform. As we speak today, we have just about 100 of them on our platform that are really digital lending apps. I'm not talking about microfinance, but I'm just talking about those sections of the market who use these digital, have all manner of apps that they give to Nigeria. And so sometimes we are not able to respond to them because we don't have them as our customers. Some go to the extent of even, sending telephone messages through telephone to a lot of people that are in the database of the defaulters of their loan. And even when some people have paid, they still keep on, getting all manner of, fraudulent and very embarrassing messages from these, apps and from these companies. So today we are focusing on how the regulations by FCCP shape responsible borrowing and loan recovery. They will be telling us the activities, what they are doing to contain all the issues that we talk about, and most of the issues we talk about, to ensure sanity is in the space. And don't forget that we need these guys. We need access to loan in Nigeria. And we have seen from where we sit as Easy Credit Bureau that these guys are doing a lot. Micro lenders, fintechs, they are doing a lot to push lending to consumers, me and you who are individuals. And they are doing a lot in that regard. So we can't throw away the baby with the bathwater. But we need to also ensure that there is sanity and there's responsible lending as well as responsible borrowing. So the aim, what we expect from this webinar is to to examine the challenge of irresponsible lending in Nigeria and the characteristics. What are the patterns that we have seen of this irresponsible lending by a lot of some of these apps? And then what's the government response to them? Government in this case is represented by FCCPC. How have they been what have they been doing to ensure that there is sanity, there is regulation, and there is penalty for misbehavior from all these people who don't comply? And then how can consumers, me and you, benefit from FCCPC in enjoying responsible borrowing and repayment? They will advise us also as that. And then we'll round up by discussing the role that credit reporting agencies like CRC can play in ensuring responsible lending and responsible borrowing. Now, as a bureau, a lot of people may not know what we do, and that's why I first things to say to have a disclaimer. CRC do not give loans or ask for money to be paid into personal accounts. We are not a bank. We are a data company. What do? We collect information and use from all lenders in Nigeria and process this information, make it in a way that become meaningful and useful to those who are lenders in Nigeria. Our job is to reduce information asymmetry. What we mean by that is to reduce that gap in information about borrowers, between borrowers and lenders. A lot of borrowers don't want to volunteer information about their behavior, about their past obligations, about where they have taken loans, and so on and so forth. So with CRC Credit Bureau, those data about borrowing is submitted to us by all lending institutions in the country. And we then make those, we work on those data and make them available to also that class of people or that class of institution who are doing lending. So our focus is to collect consumer and corporate credit-related data, to process the data, to generate what we call credit report and credit score, and an array of other products, and make those products available to the same set of people who are submitting the data to us. Basically banks, non-bank financial institutions, insurance companies, telcos, utilities like discos, rental agencies, manufacturers, retailers, and so on and so forth like that. That's what we do as a credit reporting agency. Our job is to ensure that lending is no longer done in the dark. Our job is to ensure that lenders have access to credible profile of potential borrowers so that it can help them to make decisions. Now, CRC is owned by a consortium of Nigerian banks and Dun & Bradstreet, a very respected risk management solution provider around the world. They have been around now for about 16 years, and it's interesting to know that our owners include the major banks in Nigeria: First Bank, Union Bank, UBA, GTB, FCMB, Access Bank, EcoBank. Yes, so I think I mentioned all of them: Stanbic and Standard Chartered Bank. These are banks that own CRC. We were registered in 2009, became live in 2009, and we are an award-winning institution. In the last 6 years, we've been the best credit bureau in Nigeria. And today we have over 2,200 institutions, using the services of CRC from various sectors, like I mentioned. Some banks, all the banks in Nigeria, whether they are microfinance banks or they are leasing companies or they are commercial banks or the investment bank, they are all members of CRC. Telcos that we know, the discos, are also members submitting data about those who are owing electricity bills, insurance, fintech companies. Some of these micro lenders and apps that I've just mentioned are also members of CRC Credit Bureau, to the extent that today there are about over 60 million subject counts, 60 million individual information about 60 million Nigerians on our database. And that covers about 150 million unique loan counts in the country. So it's a huge database that we have. And because we cover as much as possible, almost about 95% of lending taking place in Nigeria, have been covered by our database. And this continues to grow from time to time. So if you are among those lenders today, especially if you have an app, maybe you are among those 465 listed on FCCPC and you have not joined CRC, this is an opportunity for you to join and become part of those that submit data, and also use the platform for you to be able to, access information and profile, your customers so that you are no longer lending in the dark. We have significant number of partners, those who help us to generate a credit score. We have some institutions who are partnering with us to enable engineers who are outside the country to be able to use their credit report and credit score in Nigeria to access loan outside the country. We've seen this benefiting Nigerian students who go abroad and want to take student loan abroad, benefiting from the activities, the borrowing activities in Nigeria, and leverage on the relationship we have with Nova Credit. And so our products cover a range of all what is involved in lending, from prospecting for customers to profiling and assessing customers when they apply for loans, to monitoring the loans when those loans have been granted, and to manage default and collection, and default and non-performing loans when such loans, some of those loans go bad. So we have almost about 16, products that we have developed to help, lenders across the spectrum of lending. And part of what we also do is we have a commercial education center that trains people and bankers, to bankers and financial people in risk management, in credit, in delinquent management, and so on and so forth. In fact, that's a major area of our portfolio that we also work on, we focus on. So don't let me take much of your time. The bureaus support borrowers to be able to have very good information, and because of that, you can leverage on this. You can check your credit report and credit score. If you go online to CRC Credit Bureau, you can find your credit report to see what has been reported about you that lenders all over the country are having. And you can as well also even use your mobile. You can download our app, CRC Mobile, through which you can then generate the same report I'm talking about. And if you are a lender and you have not joined CRC, it's also an opportunity for you to join, so that you also join association of lenders who are contributing data and are using data on a large, massive scale to provide customers and be able to lend without lending in the dark. And through that, we contribute to financial inclusion, we contribute to economic growth, we contribute to economic development. Our impact has been very obvious in the Nigerian economy. We've made sure that lending is no longer done in the dark. Lending is now done with active information by lenders. They have access to our information and they can really, leverage on that to lend. And because of that, we have seen significant growth in loans to consumers, in loans to SMEs. Most Nigerian banks now have specific desk for consumer loan, for retail loan, for SMEs. It's because they are leveraging on our availability, on the fact that we are in existence and we are providing them the information they need. We can see quite a lot of apps now around the country, leveraging also on tapping data from us live directly and be able to use that to provide. And so we see institutions doing thousands upon transactions every day, to borrowers every day. We have been helping in reducing identity fraud. We have been able to help in bringing down the level of non-performing loans. We have been helping in improving debt collection, in tracing customers who have run away, and also in analytics and financial market modeling. So all of this, and we have also helped Nigeria to be able to improve in lending among Committee of Nations around the world. And so we have contributed to risk-based pricing, where customers now pay the interest rate they charge them is based on the level of risk perception by the lender. So this is some of the impact that we have made. I think we will have opportunity to do more in terms of what we do and how it affects you and me in the course of this webinar. Let me say a big thank you. Let me welcome all of us to this webinar. Let me thank you again, Mr. Ondage Ijagu, and of course, the EBC CEO of FCCPC, Mr. Tunji Bello, for this partnership. And for all of you out there watching us and listening to us, I want to say a big thank you, and I hope you will enjoy the session. Thank you so much. Good morning.
Thank you very much, sir. Thank you very much, sir. Dr. Tunde Popola, our amiable MD CEO. We really appreciate you for this welcome address and introduction. You have been able to let us know what impacts CRC has been able to make, and also to mention, for those who are just joining us, my MD, Dr. Popola, is the pioneer of credit bureau in Nigeria. So he has been able to ensure that lenders do not give out loans in the dark. He has been able to ensure that lenders do not give out loans in the dark. And what we are doing is to assist lenders and borrowers to ensure that their decision making about lending and borrowing is data driven. You know, you are not just giving out your loan in the dark. And as Doctor mentioned, we don't give out loan, but we support. We are a credit bureau. We have information data to enable you as lenders to make data-driven decisions. Thank you very much once again, Doctor. We appreciate you. At this junction, I want to call on the representative of FCCPC, Mr. Ondaje. Mr. Ondaje, for those who are familiar with our media platform, Mr. Ondaje has been in the media for a while. I've been seeing him all around, speaking to Nigerians, educating us about responsible lending and borrowing. So for people who are familiar with the situation of Mr. Ondaje, he is not an unknown face in the media environment. He's a very well-known person. So Mr. Ondaje, we really appreciate you. Welcome on board. Please join me to welcome Mr. Ondaje Ijagu. You're welcome, sir, for your presentation.
Thank you. Thank you. And good morning. Thanks, the compere. I appreciate your kind words. Like you know, I am actually standing in for my Chief Executive Officer and the Executive Vice Chairman, Mr. Tunji Bello. His shoes are quite large, so I'll just manage to stay inside his shoes a bit, but I cannot fill the gap, I know. It's just that I'll try my best, and whatever is a plus here goes to him, whatever is a minus comes to me. I'd like to appreciate the MD and his team for inviting us to make a presentation here. He also has very large shoes from what has been said about him, and I can see that you guys are doing very great work. I also want to acknowledge my fellow speakers and panelists. Thank you for being here with us, and the audience, eminent members of the audience. I thank you for being here. Okay, so I don't know whether you can see my screen. Can you see?
Not yet, it's not showing.
Oh. Sorry, can you see now?
Yeah, so yes, thank you so much.
Okay, thanks a lot. Okay. So the topic of our presentation this morning is how FCCPC regulations shape responsible borrowing and lawful loan recovery. I'm talking about the FCCPC regulations. We're talking about the regulations that we call the DEON Consumer Lending Regulations 2025. That is the digital, electronic, online, and non-traditional consumer lending regulations 2025. So that's the regulations we're talking about. I would proceed with my presentation. The FCCPC, like you may have known, is actually the Federal Competition and Consumer Protection Commission. It is established to protect consumers and to promote fair, efficient, and competitive markets in Nigeria. in line with the Federal Competition and Consumer Protection Act of 2018. The regulatory evolution of the FCCPC begins with the FCCPA 2018, that's the Federal Competition and Consumer Protection Act of 2018, which provides the foundational legal framework for consumer protection and competition regulation. Before 2018 and effectively January 2019, we were the Consumer Protection Council. But the FCCPA 2018 repealed the then Consumer Protection Council Act and replaced it with the FCCPA 2018. And that was when competition was added to our mandate. And then we had expanded powers and functions. The digital, electronic, online, and non-traditional consumer lending regulations 2025 apply this framework to digital and non-traditional consumer lending activities. I think that is one thing we need to take note of, that the regulations is actually not an isolated material. It has its roots deep-rooted in the FCCPA 2018. So some of the enforcement measures and other mechanisms that are applicable in the DION consumer lending regulations are things that have been provided for in the FCCPA 2018. And our regulatory objective is to prevent consumer harm, to standardize minimum conduct requirements, and provide regulatory clarity for participants in Nigeria's digital lending market. Let me say that we focus essentially on conduct in the marketplace. We are not prudential regulators. We would not be talking about what the capital base of a lender should be. Would rather just preoccupy ourselves with how the lender conducts himself in the marketplace, how he relates with borrowers, and whether he operates fairly or not. That is our preoccupation. And the scope of our application is, I hope you can still see my screen. Okay. The scope of our application of the DION regulations apply to digital, electronic, and non-traditional consumer lending transactions, including cash, airtime, and database advances. So even for mobile money operators, they are covered under the DION consumer lending regulations. And then for registration and compliance, it's only digital lenders that meet prescribed registration and compliance requirements that may operate lawfully. I think that is established. That's the purpose of the regulation, one of the reasons why that regulations came into being. Then the registration establishes minimum conduct standards for consumer protection, accountability, and operational transparency. It also makes for regulatory certainty. It clarifies permissible conduct, compliance expectations, and enforcement thresholds for market participants. When we talk about regulatory standard, we're saying that the DION regulations impose obligations on lenders to promote responsible lending and reduce avoidable consumer harm. Possibly like the MD detailed in his opening remarks, we can tell where we are coming from. We're coming from an era where you would say it was the wild digital lending market, where everybody could just do whatever you wanted. You would shame and name people for maybe in very disproportionate manners and all of that. So what the DION does essentially is to set a regulatory standard that you must have to adhere to. So it's not just about, okay, maybe registration for the sake of registration. I think I need to emphasize this point because also going by our history, you know, when we started this journey in 2021, after COVID, we had a plethora of loan apps that were there, and we could see clearly that they were actually abusing consumer rights. They did all sorts of things. They breached privacy, data privacy of individuals, and a whole lot of things. So we came in initially with an interim framework under which we registered even some of the digital loan operators. But even then, before we came up with the interim measure, we had carried out enforcement that entailed dawn raids, going physically to locations and raiding those locations, getting their computer systems, examining them and knowing what the problem was like, and then trying to tackle them. So when we also talk about regulatory standard, we're talking about transparency and disclosure, that lenders must provide clear, accurate, and comprehensive information on interest rates and applicable fees, the repayment timelines, default consequences, and then disclosures must be made before credit is extended and must not be misleading or concealed. Before the DION came into being, we didn't have that kind of a measure that at least was instituted as part of our statutes. Then we're talking about active consumer consent that is under the shaping of responsible borrowing. How do we shape responsible borrowing? One of the measures is active consumer consent, where credit must be initiated by the consumer. You know, we also had this issue of automatic, unsolicited or pre-authorized credit extensions that are now prohibited under the DION consumer lending regulations. We had complaints where people would say, look, I didn't apply for any loan. I just sat and then I got an alert, and it was maybe to the tune of, would say, look, I didn't apply for any loan. I just sat and then I got an alert, and it was maybe to the tune of X amount of money. And 30 days after, they were being hounded for something they didn't solicit for. It was, like I said, the wild digital lending market. Then the issue of affordability and due diligence, that was also something that lenders were not doing before now. The DION regulation makes it mandatory for them to do. Lenders are expected to conduct proportionate assessments of a borrower's capacity to repay, and they're using lawful and appropriate data, because we're not saying you go surreptitiously to begin to obtain data about individuals. Whatever you're doing concerning an individual's data must agree with the Nigeria Data Protection Commission's requirements. And then the objective is to reduce reckless lending and excessive consumer exposure. Because if you haven't done an affordability due diligence on me, for instance, and you think you could just dump a 50,000 naira loan in my account, even when unsolicited, even if it is solicited, and you know that I do not have the capacity to repay, you know that that is obviously disaster waiting to happen. Then loan recovery under the law. We have some prohibited and permitted conduct when it comes to loan recovery. The policy objective in that direction is not to prevent recovery of legitimate debts, but to ensure that recovery occurs strictly within the bounds of the law and respect for consumer rights. I must say that consumers sometimes run to us when they are hounded, maybe because we say, okay, look, lenders do not have the right to harass consumers. But sometimes when some consumers, I like to say advisedly that some consumers will run to us and begin to think, okay, maybe we have the measure to ensure they don't pay their debt. No, we are for responsible recovery of legitimate debts. The one we are against is the very irresponsible conduct of some lenders that we have observed over time. And then also talk about the clear prohibitions that are there in the law, and that is by extension the regulation. And those clear prohibitions include harassment or intimidation, coercion or threats, public disclosure or shaming of alleged debtors, and then physical force or undue pressure. We are all very familiar with these tactics. They were used over time by lenders in the era we are just coming out of. And talking more about loan recovery under the law, we also have at least we recognize lawful recovery channels, which debt, and to that extent, we're saying that debt recovery must be conducted through respectful, proportionate, and lawful means. The word proportionate we must have to underline, because if, for instance, somebody, we have had instances where some persons would call us and say, look, my loan would be due for repayment tomorrow, and already I am being harassed today. And that could even just be a first-time borrower. In such a situation, we frown at those kind of things. And we are saying that communications, that's the position of the law, must remain factual, non-threatening, and limited to permissible channels. So if we must communicate a lender, those kind of the kind of things we have presently is a situation where somebody would send a borrower a text message and say, look, I'm going to tell your boss in your place of work that you are a habitual debtor, you are a criminal element, and all of that. Those are not the kind of communications that are allowed today under the law. It's strictly prohibited. Then we'll talk about regulatory oversight, which is about the fact that digital lenders are required to disclose their proposed recovery and enforcement methods to the Commission. Before now, that was also not applicable, but under the Dion consumer lending regulations, they must beforehand tell us how they could measures they could adopt to recover their debts, and recovery models that are inconsistent with consumer protection standards may be rejected or sanctioned. And talking about data protection and consumer privacy, we can't talk about this enough. It's what we have seen over time, where people will use all sorts of means to access the consumer's data and splash all of those things all over the place. Photos that should have been private will be displayed out there for people to see. Phone contacts are exploited because they have undue access to those things, and then they exploit them to the maximum. Under the current regime and regulations, digital lenders must comply with applicable data protection laws, including the Nigeria Data Protection Act, NDPA of 2023, and the digital lending services operating in Nigeria must be identifiable and accountable to Nigerian regulators where violations occur. In fact, that's even the main reason. When we carried out some enforcement in the past, like the Dawn rates I referenced, we didn't know the identity of the lenders. We didn't know anything about them. No operational or rather their addresses were not known to us in any way. But we used whatever means we could just in the interest of protecting Nigerian consumers to be able to locate some of them. So currently the new regime and the new regulations makes for then the digital lending services operating in the country to have identifiable and they must be identifiable and then must be accountable to Nigerian regulators, one of which is the FCCPC. Then we have issues of restricted data access that it involves the fact that lending and recovery activities must not involve unlawful access to or misuse of consumer data, including personal contacts, call logs, photographs, or private files. And talking about further about that, we have the issue of regulatory coordination under the DION consumer lending regulations. And it's to the effect that lending and recovery activities must not involve unlawful access to or misuse of consumer data, including personal contacts, call logs. Sorry, there's a repetition there, but what that means essentially is the fact that we don't do this in isolation. We'll coordinate with sister agencies that are responsible in one way or the other, and we'll be happy also to collaborate in some ways, even with the credit bureaus. Then enforcement sanctions and due process. We have administrative sanctions, which where violators are established, the FCCPC may impose administrative penalties in accordance with the FCCP and applicable regulations. Then persistent non-compliance may result in proportionate operational restrictions, the listing of digital platforms, or other lawful enforcement actions. When the MD spoke earlier, he talked about the fact that he saw that about 45 digital loan apps were delisted from the FCCPC website. Those are the kind of things we do sometimes as measures to ensure that everybody is in line. And it's not just from lists, it will also be delisted from third-party platforms like Play Stores of mobile phones and all of that. So we do all of that. Then personal and corporate liability, yes, this is also very key before now. This is also one of the measures that is we have derived from the FCCPA 2018, that it's not just the companies that could be affected. If there are some kind of infractions, depending on the proportion, it could also warrant, it could extend to corporate entities, and where legally justified, responsible officers or directors, they could be prosecuted. Then issues of adjudication and review, parties that are aggrieved by the Commission's decisions have a right of recourse to the Competition and Consumer Protection Tribunal and the courts of law in line with due process. Then the issue of partnership, or rather a recognition for credit information, market discipline, and financial stability. We actually recognize the role of credit information in the job that we're doing with respect to digital lending. And we expect that, or rather, we recognize that that makes for accurate and lawful credit reporting, supports responsible lending, effective risk assessment, and market discipline. This is essentially your tough as credit bureaus. We recognize your job a great deal. And for us, that should even be, your job should be one of the things that digital lenders will leverage. The task that you perform will leverage, particularly when they want to assess the affordability capacity and whether a borrower had been delinquent in any way. They definitely will have to leverage credit bureaus for such information. Credit bureaus, like we recognize, help reduce information asymmetry in the consumer credit ecosystem. And we also recognize that effective credit information systems support differentiated risk assessment and reduce reliance on indiscriminate pricing or abusive recovery practices. The MD also highlighted this in his opening remarks when he talked about the fact that, yes, for a borrower whose record is very clean, definitely the lender must be in a comfortable position not to overprice even the interest and other fees that may be there, and knowing full well that the turnover with such people would be frequent and would also help the growth of their companies. Then we'll talk about regulatory alignment. The FCCPC encourages a lawful data furnishing to recognized credit bureaus. It's one of the things we encourage, and subject to consumer protection and data privacy requirements. I think that is also key because whatever we do, one of the motivations we had coming into this arena is the fact that the issue of data breach became quite pronounced, and that was quite dehumanizing and debilitating for the consuming public. Then we'll talk about institutional cooperation. Credit bureaus are key stakeholders in promoting compliance, responsible borrowing, and sustainable financial inclusion within the limits of the law. We actually recognize your role in that respect. The MD spoke seriously about it, and we appreciate that is happening. And we'll look forward to those handshakes between the credit bureau and digital lenders, so that we could have very much more civil ways of profiling consumers who borrow, and then also evaluating their capacity for repayment. What the FCCPC regulates, we regulate unfair, deceptive, exploitative, or abusive practices affecting consumers. We also conduct standards relating to disclosure, consent, and debt recovery in digital lending. Then market behavior that distorts competition or causes consumer harm is another thing we regulate. And we also regulate compliance enforcement subject to due process and judicial review. We are not immune if we go beyond our limits. Definitely we expect that the judiciary should be able to at least intervene and interpret when people are aggrieved. So we'll try as much as possible all the time to work within the confines of our law and the extant regulations. What the FCCPC does not regulate, we do not regulate interest rate setting or loan pricing. You know, like I said earlier, our regulation is not the prudent regulator that maybe organizations like CBN and some other sister agencies are. We just essentially focus on the conduct of market operators and how that affects consumers. So anybody waiting for us to prescribe interest rate or loan pricing could just wait for eternity. It's not part of our job. We also do not regulate commercial decisions on credit allocation where lawful. Monetary, prudential, or central banking functions, like I had highlighted severally, we do not regulate. So we won't set maybe a capital base for anybody in the industry. Who won't be bothered about how you arrive at your fees. But where we could come in is if you now collude with other operators to fix your fee. Definitely that would affect competition as well as consumer choice. So if that happens, that's the only time you could see us. But in terms of maybe determining what should be, we don't get involved. Then for private debt collection or contract enforcement, except where consumer protection laws are breached, we also do not get involved. Our guidance principle is that the FCCPC ensures that credit markets operate lawfully, fairly, and transparently without replacing commercial judgment or financial regulation. Those ones are for the prudential regulators to make, and also for the operators themselves to make. In concluding, I'd like to say that we work towards a balanced, we ensure that regulation is balanced where would have a sustainable digital lending ecosystem and we know that it requires lawful conduct by lenders and responsible borrowing by consumers. So like I said, we're not just holding lenders to account, we also ensure that consumers also do their bit. That is why we are encouraging things like profiling, relationship with credit bureaus to be able to tell the character of a consumer. Our regulatory commitment is the fact that we're committed to eliminating abusive and unlawful practices while supporting compliant and ethical financial institutions. The market participants are encouraged to align their internal policies, operational manuals, and recovery practices with the GEON regulations to ensure long-term market stability. Thank you very much.
Thank you very much, Mr. Ndaje. Thank you. We appreciate this. Very insightful. And I must say, you have done very, very well. You have actually clarified so many doubts, misconceptions, because ordinarily some people will think, oh, when you owe and you are unable to pay, and they ask you to pay, let me rush to FCCPC for protection. So you have made us to understand that you are not saying they shouldn't pay their debt, but they have to be treated fairly and responsibly. Thank you very much for this introduction. For this keynote speech, explaining what the regulation is all about and what it is not, and how to go about it. And it's also ensuring that we are trying to make Nigeria a better place, just as my MD is doing, to ensure that people can actually do so well with lending, borrowing, and we can do all those things responsibly. Thank you very much once again, Mr. Ndaje. So at this junction, we'll go into the panel section. We'll go into the panel section for about 20 minutes. But before we go into that, I want to encourage all our attendees, our participants, to drop their question in the Q&A section. Just look at the Q&A section, drop your questions there. I can assure you all your questions will be attended to. So at this junction, before coming back to you, Mr. Ndaje, let me rush to Mr. Kazim, because he's a practitioner, and I believe this affects him and his colleagues. So, Mr. Kazim, let me come to you straight. We've all listened to Mr. Ndaje. We started with the introduction by the MD and how Credit Bureau is assisting, and also the direction the FCCPC is going. So, Mr. Kazim, looking at all of these, what steps can financial institutions take to encourage responsible borrowing among consumers in line with these FCCPC regulations? What can financial institutions do to ensure that there's responsible borrowing among consumers? Thank you very much, Mr. Kazim.
Thank you very much, and good morning, Mr. Ndaje. Out of my heart, my MD, Dr. Tunde Popola, respect forever. Okay, back to the question. What can financial institutions do to encourage or ensure responsible borrowing from lawful recovery? Great question, great concern. Once again, Section 115, Section 116 of FCCPC Act rightly says that there should be clarification of what banks are selling to consumer. So on the strength of that and of those sections, I want to say the first step that should be taken is transparent loan products. If financial institution should embark on transparent loan products, specify in a clear terms, what are those things that you do? What are those things you don't do? Including pricing, terms, conditions. Do not involve with any hidden charge. These two sections are very, very concerned and relevant to financial institutions, right to clear information and be transparent. If you are charging processing fee once in a year, please charge once in a year. Some banks, of course, they charge processing fee every quarter. And CBN has specifically mentioned the maximum amount that can be charged on this. So first point and major point is, let there be transparency in loan product packaging. The second point is section 120 of the same act mentions and specifies on responsible service delivery. Responsible service delivery, that's section 120. So based on that, in those days, financial institutions embark on collateral-based lending. Today, FCCPC says embark on affordability-based lending. In other words, we call it capacity-based lending. I'm going to give you 4-story building in Ikoyi, give me 50 million naira. That was then. What FCCP is saying today is affordability-based lending. Can this person repay? Because if this person does not repay, what then do you do on lawful recovery? What the same act is preaching against. So the second point is, once you are transparent in what you are selling, then subject your appraiser on affordability. What we in banks refers to as capacity-based lending and less of collateral-based lending. I understand. CBN also says that all loans should be collateralized. But first thing first is affordability, capacity. Can this person repay this loan? If yes, why are we fighting? Why are we abusive when it comes to recovery? The third point, client education and selection. One of the problems we are facing in this industry is we give money to whoever asks for this money. No. Client education and selection. You agree with me, under 6 points of credit circle. The first one is credit interview. What do they want? Why do they want it? What will repay this loan? Consider all these variables. Educate this customer. Let them know they are expected to repay this loan from cash flow, not promises, not futuristic statements. When I say my father's house, I will pay your loan. No, that was then. Today, educate them. Difference between why to pay and why to pay as at when due. The first point I mentioned is transparent loan packaging. 2, affordability-based lending. The third one, client education and selection. We keep saying customers are kings. I agree with you. But who are those selecting these kings? Who are those appointing these kings? The same bank. They appoint them today, tomorrow they insult them. You cannot clap for a customer and tomorrow you slap that same customer. The judgment is not on the bad employee, rather on the bad employer. The same thing, it is the bank, not the customer. And the fourth point on that is early warning signs and customers' early engagement. These customers are giving you signs, but we choose to ignore the signs. For every bad loan, there are signs. For every bad loan, there are indicators. For every bad loan, check your file. So you cannot transfer your poor appraiser back to customer by attending to them in disrespectful way. So having mentioned these 4 points that I said, the first one, let there be transparency, section 115 and section 1. Are you hear me? Can you hear?
Yes, sure, we can hear you. I can hear you. Great. I don't know about others. Okay.
Okay, it's like they went off. Okay, can I continue then? Okay.
I can hear you clearly, but I don't know about the others.
Okay, can any other person hear me? Only Mr.
I can hear you, sir.
Okay, fantastic.
I can hear you, sir.
Fantastic.
Thank
so how come financial institutions encourage responsible borrowing. I've mentioned 4 points, and I will be glad that those 4 points are taken serious along with the sections. Section 115, 116, Section 120 are very important to all financial institution practitioners. Thank you very much.
Thank you very much, Mr. Kazim. I really appreciate you. Thank you very much. But I will still, before I allow you rest a bit, let me ask a follow-up question. You know, I know that Axiom has Axiom Money, a loan app,
Yes.
and this presentation focuses more on digital lending. And now that from what we've heard from Mr. Ondaji, you cannot just harass unlike those days. Someone would just say, oh, Joshua is on the run, Joshua is a thief, he's going with our money and all of those things. That you cannot do all those things again, or just calling people's family members. Now, considering all these FCCPC regulation, how will you approach loan recovery without risking legal and reputational damage? Because now, this digital money that you give out, they are mostly without collateral. I don't know if that is correct.
You're right.
Yes. So how do you go about your loan recovery now without risking legal and reputational damage? Because if you say someone is a thief is going, he has wrong with my money, or you are calling people's fathers and cousins and all of that, FCCPC will come after you. So how do you go about it, sir?
Thank you very much. You equally agree with me that Axiom will not launch a product without reading in and out of regulatory policies surrounding it. So I will respond to this by saying Section 17, Section 18, and Section 163 of FCCPC also mentions specifically there is ban on abusive recovery. With that alone, Axiom will never go against these 3 sections. Having established that, I made it known to you that the first step is credit interview. Most of us don't do it. The fact that it is online, there are algorithms that ask some specific questions and also response to those questions. Responses to those questions are considered as options for rating customers. I have done the needful by conducting search on 2 credit bureaus as stated by CBN. I've conducted the needful by ensuring that I understand the affordability skill, capacity of this customer with references to the bank statement, which are not physically given to me, rather auto-generated. So considering all these elements, I've locked you up on your behavioral movement. I know where you stay, not just by giving me your utility bill. Behavioral risk analysis has shown, does this customer stay here? How long has he been staying here? Where does he go to? Where you claim you work? How frequent do you go there? How frequent are you where you stay, you work? I've considered your capacity, your behavioral risk has been assessed. There should be no reason why you should be in default. I also agree with you. Default is inevitable. If this happens, I have my direct debits linked to the account supply with BVN. Today we are taking a step further. If you give me account A and you choose not to fund account A, you are funding account B, then from beginning, getting consent from these customers, I use your BVN to link those accounts of yours and get my money back on your consent, on your pre-consent giving before loan is approved. That's the second point. Third one, we have also experienced high default as at earlier stage of the launch of this product, but today we are no more doing end-to-end approval and disbursement. When we started, it was end-to-end approval disbursement. Today, we have end-to-end approval, but a stop at disbursement leg until questions are answered correctly. Thank you very much. Moderator.
Thank you very much. Thank you very much, Mr. Kazim. So let me go back to Mr. Ondaji. Hello, sir. Are you with me, sir? Hello, Mr. Ondaji.
I can hear you.
Thank you very much, sir. Thank you. So looking at this regulation, how does FCCPC support institutions in adopting these ethical lending and recovery frameworks? Do you have resources that you provide to financial institutions, or in what way are you supporting ethical lending, sir?
Yeah, in the ways we're supporting, there are a number of ways. For instance, your MD spoke about going to our website and seeing a list of legitimate digital lenders. That's one way of supporting them, because in as much as we cannot make the choice of lenders for consumers, we have made it a point of duty to separate the seeds from the chaff. So those that are not listed there clearly are not legitimate digital lenders in Nigeria. In such a situation, consumers can look through the 465 digital lenders that are listed there and make their choice. By doing that, you're already supporting the lender because you're able to vouch to some extent for his reputation and put it out there for consumers to see. We also put out some resources, particularly with respect to sensitizing consumers about one, their rights under the law, as well as their obligations. Like I had said and highlighted in our presentation, consumers had come to us maybe thinking it was safe haven to abdicate their role of loan repayment, and we have advised them appropriately. So we give all this support. What we will not do is to make specific recommendations. And then you would also agree that what we are doing essentially is to create the enabling environment, the level playing field. Because one of the incentives for somebody who is legitimate is to get the charlatans out of the circle. And we're doing that effectively. We're pursuing them to whatever corners of the earth that we can when we identify them. We go to third-party operators to delist them from their platforms. We also sometimes do advisories for the suspension of their accounts by banks and other institutions. So these are the kind of support we're given to lenders. I think it answers your question.
Thank you very much, sir. I appreciate you, Mr. Ondaje. So I will be coming to my MD, Dr. Tunde Popola. CRC Credit Bureau has pioneered so many things, both products, services, and even the Bureau itself. So in view of this FCCPC regulation, because it means that digital lenders cannot just harass borrowers again, and digital lenders will need support, because a lot of times they are not asking for collaterals. So, and they want to give out money, they want to be in business. And when there is default, they cannot harass, just as Mr. Ondaje has mentioned, they cannot begin to harass borrowers. They can't send out their details, even when they collected their maybe next of kin's details and all of that. They can't just keep sending harassing messages and all of that. So it shows that lenders actually need support. So, sir, is CRC planning to come up with products to support with this new regulation, sir?
All right, thank you so much, the moderator. I think I want to give kudos to the two speakers, Mr. Ondaje and Mr. Bisriyu, for the very excellent information they have provided to all of us this morning. For CRC, I think our job is data. Our job is information. Our job is to provide information. Our job is to help lenders to make informed decisions. And therefore, it becomes very imperative for us to make sure that those information are available and they are provided the best way possible. Now, you see that profiling of customers' information is very important for lending. Tracking of defaulters when they default is also very important for borrowers, I mean for lenders. CRC is equipped to be able to support these two major areas. First, the ability to identify those who are good to lend to. Second, the ability to, run through and monitor what's going on after the loan has been granted. Third, the ability to support collections. And I think this is an area that we take very seriously. The era of just blacklisting people, blasting information, incorrect information, seditious information, very bad information about borrowers to contacts on their phone or all other areas that you can get information to about them is illegal, like we have been told by Mr. Ondaje. So what we have is data-driven system. And I think that's what every legitimate, responsible lender should adopt, data-driven solutions. The era where you don't have information is gone. The era where you don't even know what is going on with your customer is gone. You're looking for capacity to repay. You are looking for ability to repay. CRC is in the best position for you to join. And the way it works is that we have a large database. So when you join, you also become part of it. And that enables you to have access to a large database of borrowers in the country. And I think that's what is what we bring to the table. Now, there is in addition to the FCCPC Act, I think a major instrument of law that is also available is the National Credit Reporting Act of 2017. That's the act that supports the activities of credit bureau, that even mandates all lenders or those even selling on credit, not just those who lend by providing cash to others, but if you sell on credit, it's a form of lending, right? So those also are part of what the National Credit Reporting Act law covers. And it enhances your capacity, protects you by making sure that your activities are within authorized permissible purposes. So you can leverage on CRC database. CRC has a way for you to join. Just contact CRC. It's a very seamless, way, and we have developed apps that can make you to connect automatically. The keys are there. The logic is there, and it's just you can even join within 24 hours. You can connect. So, and that's what we bring to the table. So instead of you blacklisting people or not knowing how to provide people or your customers or people that come to you, we are there to give that support to you. And I think that's the whole essence of credit bureau. This is one thing Nigeria government has done successfully well. And I think we need to give kudos to government for giving an environment where credit information sharing is permissible, is permitted, is encouraged, is even mandatory, for lenders, because then you don't need to have, the need to recourse to illegitimate way of either bringing up customers or identifying customers or lending to customers or pursuing your loan after you have granted them. This is where credit reporting system is helping to deepen the market, to enhance access to credit, to ensure that those who are legitimate, those who are credible, continue to get access to credit, to ensure that those who have very good credit history and credit score can really get, concessional interest rates, and can even be lent to without much collateral or with little level of collateral required or additional comfort required, because the information is there, the history is there, the performance is there, the credibility has been established through the data that you get from CRC Credit Bureau. And so my take is to call on all those lenders that have not joined the bureau system to use this opportunity to really join and begin to also benefit. That will expand your business. It will make, providing customers easy for you, and to make collections easy for you legitimately, without blacklisting anybody, without throwing out messages that are really, really very unlawful, as we can see from what Mr. Ondaji has told us. So I think those are just few things I want to say. Maybe the last thing to say on this is to assure of data privacy, because CRC is a licensed credit bureau by the Central Bank of Nigeria. We are regulated. We are, complying with the NDPR laws and regulations and the CBN regulations. We are examining from time to time. So the privacy of data, of not just the data subject, who are the borrowers, is key, but also the data submitted to us, furnished to us by lenders, protecting them and making sure they are protected is very also key to us, and we take it with high level of responsibility. Thank you.
Thank you very much, Doctor. I appreciate that. Thank you for that insight. So, Mr. Elijah, I want to come to you. You've been liaising, relating with virtually microfinance bank or institutions I've been seeing around. And as someone who heads training harm, I've been in classes, I've been listening to a lot of questions and all of that. And in fact, some of our lenders do not know the extent to which CRC Credit Bureau has gone in developing solutions. And I'll give you an instance. Someone once asked a question that the borrower and the guarantor have been incommunicado, that they've not been able to locate them. And I just look at it that these are some of the products that CRC has developed. So looking at all of this, I have been able to realize that lenders will need support. They actually need support because now, especially digital lenders, they don't have collaterals. So can you explain to us some of the products that they will be needing from your interaction? Because you've been interacting with these people, you've interacted with product developers, and not only locally, even internationally. So what are those products that you have and you think would be useful to our lenders and even the borrowers? Thank you.
All right, thank you very much. Good morning once again. First of all, I must appreciate the management of CRC Credit Bureau and the CFEC team, the training arm of CRC Credit Bureau, for bringing this together. Even consumers, borrowers, on what they need to know about the industry. So yes, speaking of the various products and services, my MD have even mentioned some of them when he was talking earlier. So there are various solutions that CRC Credit Bureau has come up with in time past, from experience, from things we've seen in the market, from feedbacks that we've obtained from the market, from individuals, from consumers, and from institutions. So these products are things that would help in institutions to really be able to dimension their customer, profile their customer, even to the extent of targeting the particular set of customers that they need to go after, that they need to showcase their products to and give their products to them. Some of these products are tools like for individual and for companies also. So for companies, we have a product like credit information reports, which helps them to know like an historical record or historical overview of what their customer have done, even before they give facility or loans to them, to say, okay, this is what Mr. Elijah have done with so bank, so institution in time past. Is he worthy character-wise? Is it somebody that will be able to repay, from what Mr. Bisili, you mentioned earlier. Character-wise, is it somebody that will be able to repay the facility? PMR, portfolio monitoring review, is also a cogent product or tool that institutions can also make use of to, dimension their customer to say, okay, let's even assume, yes, when they did a credit search on the customer, they've given loans or facility to those set of customers. After a while, they want to know how the customers are even performing. Perhaps it's a set of customers that have gotten facility from Bank A and using it to repay the facility in Bank B. So portfolio monitoring review will help an institution to dimension their customers to say, all this my category of customers, how are they performing? Are they doing well with me? Are they doing well with Bank B? Are they not performing at my bank and they are performing elsewhere? Or are they not performing in my bank and in the other institution? So these are some of the things that it helps them to do. For institutions that also accept check from their customer, or for institutions that wish to also conduct a sort of a second level verification on their customer, even before giving them facilities. And there is also another tool or a product that's even backed up by a policy by the central bank called Dishonored Instrument Verification System, .check. So this product helps you to check a customer that may have issued .check or check that bounced, check on unfunded account. They'll be able to know them, do a verification on them to know if they should accept even a check from that vendor or that customer at every point in time. So I'll just pause on that three products. So the individual can also leverage on some things, on some tools that has been put in place by Cybersecurity Bureau to know at certain point in time, in case that any information that is provided on them by a lender that is not correct, as the case may be. So these are products that they can deal with, such as Icon Plus, Con Plus, and monitors and alerts. So Icon Plus means individual credit overview notification plus, while Con Plus means credit overview notification plus. These are products that helps you to know when information has been reported about you. Is it good? The institution said, I'm owing them certain amount of money. Is this true? Am I owing that or not at every point in time? And so by so doing, both borrower and the lender can be on the same page and help them in doing following regulations accordingly when it is right. Thank you.
Thank you very much, Mr. Elijah. Thank you. So with what I've heard from the MD, Dr. Pupola, and Mr. Elijah, it means that there are so many resources that can assist lenders in overcoming their challenges, meaning that you don't need to go the whole way of abusing, attacking, and maybe taking some drastic measures to recover your loan. There are permissible and legal means, legal tools that you can use. All you need to just do is contact the organization, be able to advise you better on how to go about it. Irrespective of the challenges you may have in loan recovery, contact us, let us know the problem you may have, then we'll be able to advise you on the various products and services that can be used to solve that problem. Thank you very much once again, Mr. Elijah. And maybe one more question for Mr. Ondaje before we answer the attendees' question. And also maybe one more for Mr. Bisiri because of time. So for Mr. Ondaje, sir, I want to learn so that lenders can understand that we are now in a new era. It's just for us to learn. So can you share with us maybe recent FCCPC enforcement action against lenders with respect to compliance, so that how you are able to enforce your action to ensure that there is compliance, and what are the lessons for the microfinance banks and the fintechs? Thank you very much, sir. Mr. Ondaje.
Oh, thank you, moderator. I'd said that I guess I answered that in the course of my presentation, but I would say it again. Our enforcement predates the DION consumer lending regulations, and our motivation is all about how the consumer is treated in the in the sector. So when we discovered that all of these were happening, that's the issue of intimidation, harassment, defamation, and all of those unconventional means. The first thing we did was to ask ourselves, who are the people behind these actions? And the information was not there. But what we did was to carry out some very serious intelligence work, and then we were able to come by certain information, and we conducted dawn raids. What that entails is going physically to the different locations where these acts were being carried out. And you wouldn't believe it, when we stormed some of these places, even their closest door neighbors would confess that they didn't know what those people were doing. All they knew was that some young people were coming to work in the morning and going back at night. I presume that probably some persons, even in the neighborhood, would have been harassed thoroughly by even some of those operators without them knowing that they were just their closed-door neighbors. So we tried to unmask them by doing that. And that was the very first step forward. And as of then, there was nothing like even the interim measures we had before, and then not even to talk of the Beyond Consumer Lending regulations. So we conducted those raids, and we were also able to get a number of apps delisted from app stores of third parties. Particularly, I don't want to begin to mention their names, but we got some apps delisted. We got some bank accounts suspended, such that even the operators, some of them tried their best to beat whatever we're doing in that respect, but were not successful. Those were some of the things that forced even some of them to begin to comply. And there are a number of other measures that are available to us that we may not have applied, one of which is the administrative penalties. We are as of now, we encourage more that there should be change of attitude, and we're happy that we're not getting the kind of reports we were getting those days. So we would concentrate more on shaping behavior and getting people to comply rather than concentrate so much on enforcement. But like you know, the FCCPC, nobody can test our will when it comes to enforcement, because we can go to any extent. And we're also happy that clearly it's stated there now that not just the institutions, even individuals could be held accountable. So people who had been behind the scene and were not out there, by the time we fish you out, the public would know. So we rather advise that we'll do the best we can as lenders to ensure that you don't get into trouble with the FCCPC. But like I have explained, these were some of the measures we took in the past, and we're still available and willing to take them if it becomes necessary. And then the other ones were the fact that even the ones who were registered, I think I need to say this because so that we don't think that registration is a license to just hide under the FCCPC cover to perpetrate what is not legitimate. Even for those who were registered fully approved, we had delisted some on account of delinquent behavior. Thank you.
Thank you very much, Mr. Ondaje. And maybe last question for in this segment, we go to Mr. BC. It means that it's no longer an all-commerce affair whereby everybody can just borrow. I need 50,000, I need 100,000. It is disbursed. It means that You have to do your background check properly to ensure that you are able to recover your loan. So, and in your own opinion, as the CRO of Axiom, and with a significant experience in this industry, how will you balance profitability with responsible lending practices? Meaning that, you know, initially before FCCPC came on board, for instance, now you may be able to lend to maybe 1,000 borrowers. Now it has to be reduced. It means that there's reduced profitability or income. So how do you measure, or how do you balance these responsible lending practices and also ensure that you are profitable? Thank you very much, Mr. Kazi.
Okay, thank you very much once again. I'm going to start with this quote of mine, that profitability should equal to responsible credit quality. It's not until when you go extra mile. It's not until when you are unlawful with recovery, cum remedia, but start your home with right and quality portfolio. That will take me to the fact that there will be two direct effects from FCCPC point of view to financial institutions. The first one, to be profitable, you need to ensure that you have enhanced consumer trust. People want to pay. People want to take loan. They want to take money from you and they're ready to repay, but they don't trust you. So you must first create that platform, trust. At the mention of your bank's name, what do they say? What can they interpret or misinterpret your action, your reaction, and your inaction to stand for? Who are you? That's the first point. Let there be trust when it comes to a transparent pricing, a clear terms. This is what we have agreed. This is what we shall do. Let there be trust when it comes to ethical recovery. They know you. Oh, that bank, you may hold their money, but you will pay without breaking bottles. Let there be customer trust to be able to stay with you. Once they have that trust, they will be retained, they will do businesses, they will increase on their businesses, then you make your money. Second one, you can be profitable even with the policy coming from FCCPC point of view if your trust in these customers and their trust in you can bring about strong brand and reputation. They will self-market themselves to themselves because they know who you are. Once they are coming on board, then you are doing your filtration through quality credit assessment. You make your money and you are profitable. The next one there also is if they trust you, they are coming and you are retaining them, you have improved portfolio quality because they will pay. I've seen customers that called, my son is hospitalized. My loan repayment is due. Please let me pay this loan repayment, but by tomorrow, I need another top up to take care of my son. This is very good from a customer. But I'd rather say, no, go and take care of your son. I will shift your loan repayment by 1 or 2 weeks. Because it's coming from the customer, we have understanding. We believe in ourselves. We know ourselves. You must create that platform. Let them be free with you. The other time I said customer engagement. Let them not just be financial prostitutes. They should not just come on board, take money and go. We do not need them for that. We need them to build relationship. So another point there is, how can you be profitable? Financial inclusion. Let them come. Do your filtration. Filter some out, take some in. That is on the positive side. However, we also have some negative points that may hinder profitability by ensuring quality and responsible borrowing. The first one there is there will be a bit of pressure on my profits. FCCPC want me to keep record, documentation, digital tools. These are not free. I'm going to spend money to buy this. So there will be a bit pressure on my immediate profits or short-term profit. Take note. But in the long time, I will make this money back. I incur the cost today, the asset is mine, but tomorrow I get my money back. The second one is if you are going to be following FCCPC 100%, you must inculcate a bit of stricter credit administration. Stricter credit administration. Do not forget, in those days, if you have your collateral, we can consider you for loan. But today, we are talking about affordability and due diligence, meaning you may have your collateral, we may still not consider you for loan. So that means there will be stricter credit assessment. This may have direct impact on drive to portfolio growth. And if portfolio growth is affected, then there's a spiral effect on profitability. Another one that I also see there is for me to be profitable, I must be smart and manage the overlapping regulatory structure. CBN has told me, charge penalty. What CBN has done is what to do. FCCPC is coming to tell me how to do it. So managing these two may pose challenge. I need to sit down, relax, map out strategy. CBN says if they are unable to pay by so day, charge this. FCCPC says this is how you charge it. You charge and communicate. They are not against each other. Rather, I need to manage the two simultaneously. I will charge and communicate effectively, as I said earlier on. The last one there is, I first mentioned financial inclusion. This same policy can also bring about financial exclusion. So for me to be profitable, I need to embark first stricter credit assessment, which may drop down or reduce or give room for some micro loan customers to be automatically out. I must be stricter with giving loan. I'm no more interested in only collateral. I want to make profits. So balancing growth and risk management is what plays around now. So as a CRO of a bank, it therefore becomes a little challenge to just match and get at equilibrium. How do the business grow? How do I manage the risk? Identifying the risk, of course, will mitigate a long way by ensuring profit is ascertained. So my strong point to all of my colleagues is let's see profitability to be equal to responsible credit lending. Once you are responsible, profit will come. Thank you very much, Joshua.
Thank you very much, Mr. Kazim. Thank you. So I want to appreciate everyone, the attendees and the speakers for joining. So we are going to the last segment of the webinar, that is attending to the questions in the Q&A segment. If you still have any question for the panelists and the speakers, both the keynote speakers and MD, the host, the chief host and speaker, please drop them in the Q&A section. So maybe the first question I want to attend to, let me ask Mr. Kazim. Mr. Kazim, I'm still coming to you with this question, last question. Is there any number one can call for counsel, please, especially for someone like me who is battling depression as a result of heavy weight of loan? So it may not necessarily be the numbers, but I'll just advise the person what the person should do, how he should go about it. Thank you, Mr. Kazim.
Yes, if I get your question right, how anyone can contact me.
So the person is saying is battling with heavy weight of loan. Okay, and is battling depression. So how should the person go about his loan? Though I believe you have mentioned part of it, it can be restructuring and all of that, but you may want to advise further as a practitioner.
First and foremost, the person should please stop the depression. That's the first thing. Please stop the depression. CBN has given room for that. If there's a toxic portfolio, there's a toxic loan, what to do and what not to do are mentioned. Provided, however, this same participant has been paying as at when due then. So we can suggest strongly that if you are battling with heavy loan, then you need to contact your lenders. Can they restructure this loan? Can they refinance this loan? Can they re-engineer this loan? Can they process this loan for you? Provided, however, you have been paying as at when due before. For a bank to restructure loan, some factors must be considered. Who are you in the past? What is their internal risk rating? How have you been paying your loan? What is your customer grading and classification? These are what I consider. If you have been an A-rated customer in my bank and I see you having a challenge, it is expected, expressly mentioned from the CBN policy, that such loan, we could consider it as a toxic asset and can be restructured. So please stop depression. There's a way out.
Thank you very much, Mr. Kazim. Thanks for that. So, Mr. Elijah, someone is asking, what does it take to register to see? Can you please attend to this, please?
Okay, thank you very much. In fact, joining CRC is one of the easiest and simplest thing for you to do. So we have dedicated relationship manager. We have a support line that you can reach out to. However, for the sake of this session, after this call, I may drop my number. But for now, let me just drop an email address that you can reach out to with your request, and somebody will reach out to you from there with what you need to do. So if you have your pen with you, the email address is salesandmarketing@crccreditbureau.com. Sales and marketing. The and is AND, everything together. So when you reach out to us, we'll be able to direct you on what you need to do. We need your license. We need all your documentations that are in place. We get this, and we give you one or two other things that you need to do, and you are good to go with your registration with CRC Credit Bureau. Thank you very much.
Thank you very much, Mr. Elijah. So, okay, Mr. Ondaje wants to say something, but there's also a question I need you to attend so that maybe you can attend to both of them at the same time. So there's a question. Thank you for your informative presentation. I would like to ask FCCPC, what action can be taken against online loan providers whose listed contact details, such as phone number or email address, are not functional or never reachable despite being displayed on their websites or apps when issue arises? Thank you, Mr. Ondaje.
Let me unmute myself. Yes, thank you, moderator. That was a good one. For such, we consider that to be an infraction, by the way, because if you provide information that are not valid, definitely we would term them to be infractions of the law and the regulations. So in such a situation, we advise the affected person to send a complaint to lenders as in lending, lenders task force at fccpc.gov.ng. That is, it should come as a complaint, as an email to lenders task force at fccpc.gov.ng. I think that answers that question, but let me also add to one of the issues raised by the MD, and I like how he put it. I think he actually described the coordination between us and sister agencies very well when he talked about if there is a default, the CBN would have prescribed what you could do in such an instance, and that the FCCPC, what they are doing is to also say how you can do it, and I agree with him totally. That is exactly what we are doing. But let me also say that if there is a default and you would charge for that, let it be something that was part of the terms and conditions that you must have front-loaded to the consumer, so that you don't do it before you inform him. You have to front-load such information at the point of application for the loan to say, in case you default in payment at this point, this is what will happen. At that point, that is what will happen, so that the consumer is fully in the know. Thank you.
Okay, thank you very much, sir. I appreciate that. We appreciate that question. I mean, the answers to the question. So, There's another question I have here. It says, how can we link customers' BVN with all their accounts for recovery purpose? So perhaps I will allow Mr. Bisiriyu to attend to this question. Do you want to share your thought on this? How can we link customers' BVN with their accounts for recovery purpose?
Okay, thank you very much. There's a solution to that. There's a software which I'm not permitted to advertise or market here, but I'm going to give you my number. That's you, Joshua. Then whoever that needs this can give it to. You plot in the BVN, having gotten details of the account details. So this is expected because they supply one account to you, whereas they stop funding that account, their money go to another account. So because you are searching around, provided there is a prior consent, in my place of work, there must be consent to this before it is done. Consent must be given by the customer to the bank before this is done, but it is doable and it is in practice. Thank you very much.
Okay. Because of our time, I will not be able to take much of the questions because of the busy schedule of the speakers and because they have to excuse themselves at the place of work and because of our time. So you can still send your questions to us. I can assure you they will be attended to. So before I give the closing remark, I want to ask the guest speaker, Mr. Ondache, to give his final thoughts before I call on the MD of CRC and also the panelists to give their final thoughts. So, Mr. Ondache, over to you, sir.
Thank you. My final thought is an advice to Nigerian consumers, and it's to the effect that every right goes with a responsibility. When we talk about digital lending, yes, the consumer is entitled to a number of rights under the law. He is also responsible for certain things that happen to him. The choice you make in the marketplace, whether reckless or not, are things that you would suffer in future. So I advise Nigerian consumers to kindly avail themselves of the list of approved digital lenders and to consult that list from time to time because we update the list. There are some we may delist at a given point if we discover that they are not living up to expectations. So always get the current list of digital lenders, check and ensure that they are actually still there currently before you engage any of them. Else you might have your fingers burnt. We know that even as we're cleaning up the system, there are some renegade lenders that are still adopting certain measures that they used to reach out to Nigerian consumers and then get them into trouble. So always check the current list, and if possible, if you want to verify their status from the FCCPC, you can always do so. Thank you.
Thank you very much, Mr. Ondache. So I'll call on my MD, Dr. Popola, to give us his final thoughts. MD,
right, thank you so much. Thank you, moderator. Let me apologize to our viewers that we are already 12 o'clock. This is the time we should have rounded up, but just spare us a few minutes to be out of this place. First is to say that lenders who have not yet joined CRC should join, especially those who are listed and approved for the purpose of lending by both the Central Bank of Nigeria and the FCCPC that we could see on their websites. The era of lending in the dark, the era of not complying with the rules is gone. And that's why I really want to commend FCCPC. For us, if my presentation will be made available, so beyond the email address of Sales and Marketing at CRC Credit Bureau that is being given to you, the last slide of my presentation also give names of 3 staff and their contact details, including their email addresses that you can also reach out to after this time, so that you can benefit from what we are doing. You don't need to go and be spreading false information or blacklisting and say so bad things about your borrowers before you can collect your loans. Once you join the CRC Credit Bureau, you have opportunity to have seamless, legitimate, legal ways to collect your loan by the kind of service and the product that we have already developed for you. Second, I want to commend the FCCPC. Mr. Ondaje, thank you so much, and please convey our special regards to Mr. Atunji Bello for this partnership today and for all that you are doing to safeguard consumers against predators, loan sharks, fraudulent players in the lending industry. You're doing a lot. We can see it. But more will come because this era of digitalization, people have access to all manner of applications now. And so you have to be at your wit to be able to be on top. And I like it when you say some will be delisted, some will be added. So it's an ongoing thing. It's not a static position. At any point in time, there will be new ones that will join. There will be some ones that will have run foul of the rules and then they will be taken out. So, but again, my job, I just want to say a big thank you for the job you are doing and for giving hope, for giving honor, for preserving the integrity and the good character of Nigerians. Individuals and businesses should check out themselves on the CRC Credit Bureau platform. You can actually make sure that you do a check on yourselves and your businesses before you go out there and say you want to borrow. What that will do for you is that you will have cleaned up all the areas that you need to clean up. You will have, where there are issues, you will have gone and contact the lenders and sort yourself out before you apply for a new loan. And for lenders, you will have opportunity to know what is the existing facilities that that individual business is already enjoying. You want to know on additional, loans under what terms and conditions. In the course of resolving issues with people, we have seen individuals who have used apps to take on 22 different loans, 30 different loans. I don't think that is healthy. And I also don't think lenders who see that this person already is indebted to 30, 30 different loans should be adding their own to that kind of, uncomfortable position. That's the essence of checking out. And CRC gave that platform to check out. You can just go to CRC website or you can download the CRC mobile app for you to have opportunity to do this. Then I want to also appreciate Mr. Bisiriyu Kazim. He's a member of the House. We really thank you for all your support, for your partnership with us, and for Action as well. I extend my special regards to Mr. Taiwo Joda for the relationship that we have. And of course, my colleagues, Elijah, Taiwo, and Joshua, for the wonderful job you have done to put this together. And finally, to Olawi, officer who is been operating behind the scene to ensure that we have a seamless session today. Thank you so much. Bless you.
Thank you very much, sir. Dr. Tunde Popola, our mentor and our leader. We appreciate you, sir. So, Mr. Bisiriyu, your final thoughts, sir.
Okay. Thank you very much. Doctor, I love my heart once again. I respect you. So my final words on this is number one, FCCPC has just confirmed further to us that credit without discipline is charity. And charity will not empower the nation. So therefore, my colleagues in this industry, please let there be effective credit assessment. Respect all what to be respected and take note that collateral is good. Collateral verification is also good, but due diligence and affordability is better. Thank you very much.
Thank you very much, Mr. Bisiriyu. And finally, my friend, Mr. Elijah Taiwo, your final thoughts, sir.
Thank you very much once again. Thank you very much. I believe we have all heard one or two things and everything that has been said so far together. My MD has given the final closing remark. So I really have nothing more to add to what my MD has said. But like I said, the contact to reach out to earlier, in addition to the sales and marketing email that I gave earlier, my phone number also is 081 82151989. I will take that again, please. 081 82151989. So you can also reach out to that phone number for further inquiries about CRC Credit Bureau. And I, myself, and my colleague will be more than available and ready to advise you and guide you accordingly. Thank you very much. Thank you to Mr. Bisiriyu and to Mr. Ondaji. Thank you very much.
So thank you very much, speaker. So before we go, I want to say that.
Thank you.
Thank you very much. Before we go, I want to say that from all what we have learned so far, from the presentation of the keynote speaker, Mr. Ondaje, and my MD, Dr. Pupola, and contribution of Mr. Bisiriyu and Mr. Elijah, one thing is very clear. You don't need to go out harassing your borrowers. So we have all the solution services that you need in case there's a default. What you can do is to contact us at CRC to show you or advise you on how to go about it. Don't go contrary to the regulation of FCCPC before they come with their hammer. Just like Mr. Ondaje said, he said they have the capacity to enforce regulation. So in case there's a default or you have challenges, contact CRC. Let's tell you the kind of solutions to address your problem. And there's a subsidiary of CRC, which is CRC Financial Education Center. In the academy, we train people on how to go about recovery. And for us at the academy, we believe that recovery starts from underwriting. So it's not when the loan goes back, you start running helter-skelter to recover. Even from the underwriting, the recovery starts. So we train you on credit underwriting, fundamentals of loan and credit assessment, loan portfolio management and recovery strategies, and everything around training that you need in terms of loan recovery. We do that in the academy. So in case you need training, and you have to even train your staff, because it is when you train your staff that you can have a healthy organization. So you can contact us at the academy, which is a subsidiary of CRC, for your training needs. So on this note, I want to appreciate my speakers, our guest speakers, Mr. Ondaje of FCCPC, the MD of CRC Credit Bureau, Mr. Bisiriyu, the CRO of Action Bank, and Mr. Elijah. I want to say a very big thank you to you. And all our attendees, we want to say a very big thank you to you, because it is because of you that we are here. If you didn't attend, we won't be here. So a very big thank you to you. Please continue to contact us for your needs. In case of challenges, we are there to assist and to provide various solutions that you may need. So thank you very much. Enjoy the rest of your day and have a wonderful day.
Thank you, moderator. Thank you, CRC Credit Bureau.
Thank you so
Thanks,
much.
bye.
Thank you.
Bye.
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 Bye.